Hello and welcome to the Signia Markets Review for December 2021. My name is Jack Rawcliffe and I am the Equity Fund Analyst here at Signia. December was a volatile month for financial markets as investors priced in the prospect of tighter US monetary policy triggered by the highest inflation reading in nearly 40 years, as well as the economic impact of a renewed surge of COVID-19 infections globally. It was a strongly positive month for equity markets. European equities achieved the largest return, up 5.8%, driven by their greater exposure to cheaper industries that are more sensitive to the global economic cycle, which outperformed more expensive parts of the market. UK and US indices were next best, recording gains of 4.8% and 4.5% respectively. However, within the US market, higher growth companies struggled for most of the month and finished with a relatively modest gain of 0.75%. As the expectation of tighter monetary policy weighed on returns. Lastly, Chinese equities returned 2.24%, which lagged other markets as investors strongly preferred developed over emerging equities during December. At a sector level, the defensive consumer staples, healthcare and utility sectors were the biggest gainers owing to the volatility in financial markets, whilst those sectors exposed to the global economic cycle, such as energy, financials, industrials and materials, also performed well. Communication services, information technology and consumer discretionary, all of which contain some highly valued companies, posted relatively modest, if not negative returns, weighed down by the potential for tighter monetary policy in future. In fixed income markets, the US 10-year Treasury yield rose around 6 basis points to end the month at 1.51%, causing the global Treasuries index to fall 0.7%. With higher inflation and the subsequent expectation for more aggressive tightening from the US Federal Reserve the main cause. Global investment-grade bonds were essentially unchanged during December. However, the riskier global high-yield index rose 1.64%, which is in keeping with the gains seen in equity markets. In commodities, after falling sharply in November, oil bounced back strongly during December, up 13.64% as investors reassessed the potentially milder economic impact of the Omicron variant of COVID-19. Gold also gained, rising a little more than 3%, even though real bond yields rose and the US dollar was broadly flat versus other currencies during the month. That's it for this month. Thank you for listening and see you in February.